In our financial services tax breakout session this morning, we talked about non-bank lending and the importance of the tax issues relevant for those that are looking to access this sector. That's whether you're a borrower, a lender, or an investor. Taxand's take is for borrowers to use the demand for transactions to try and get a better deal for the financing they need to raise. For lenders, it's to really understand the structures that they're putting in place to figure out how they can get the best after-tax return. And for investors, it's to really understand the nature of the return they're getting. As you know, this morning we're going to cover some of the tax trends and issues we see emerging within non-bank financing. In preparing for today, we wanted to make sure that as many of you as possible go back to your offices with some insights that are relevant and valuable to your business. So to do this, we've picked a topic which we think is going to be quite broad and which we expect will touch most, if not all, of your businesses over the next year or so. And to set the scene, what we're seeing is a huge number of additional players coming into the financing market. In addition to traditional banks, we're seeing private equity funds, we're seeing other types of funding platforms, we're seeing internet-enabled models such as peer-to-peer lending, crowdsourcing. We're also seeing a resurgence of traditional types of finance such as leasing, asset-backed financing, securitization. And we're also seeing, particularly for the small and medium enterprise sector, we're seeing the governments getting involved in trying to release and source finance for this important SME market. The panel are going to talk about, while there are lots of different players in the market, and they're all providing finance, that the finance they provide is not all the same, and that there are really important differences in the means in which they provide the finance, and as a result, the tax consequences of getting that finance, whether you're a borrower or whether you're a lender or indeed an investor, are going to differ. And the panel are going to help us understand some of those differences.
We'll start out briefly talking about the financial services space in the U.S., kind of some of the headwinds that financial institutions have been facing, and what that's led to, how that's kind of helped to shape, I think, where the U.S. Non-bank finance world sits today and where it's poised to go in the future. A construct to keep in mind as we go through our discussion. The banking industry in the United States is so huge that any retrenchment, even of a small percentage on a small percentage point basis, creates huge markets in the United States for these non-bank financial institutions. Headwinds that banks have been facing since 2008, the financial crisis. First headwind was Dodd-Frank, right? A significant amount of legislation, a lot of which still has to be implemented through regulation. And an item that didn't really impact the U.S. banks so much, but impacted foreign banks. Rules are kind of creating, if you will, a watchdog type specter.
So not only have you chased what was traditionally a regulated traditional banking activity and monitored and taxed in the US, but you've migrated it to platforms that are unregulated and have also been not taxed in the United States.
Right.
It reminded me of a quote from Mario Draghi recently where he was comparing the US market and the European market. And the point he was making was that in the US, businesses are raising about 80% of their finance from non-banks, with banks only making up 20% of it. But when you contrast that with Europe, you're looking at the exact opposite, with 80% of lending coming from banks and only 20% coming from alternative sources. So what struck me is all the issues that you're talking about in the US about how the banks are retrenching and not providing as much finance is having a huge impact in Europe. And I think there's huge opportunities for alternative lenders who are looking to try and use Europe as a platform for generating more deals.
Just a few words now from a Swiss perspective. You see, we have also a limited partnership, CCAF, FCPs, and so on, being transparent. Here, an important point is always, is there any withholding tax linked to those vehicles? In Switzerland, basically, yes. Therefore, that's one of the reasons, because probably this vehicle we appropriate only in limited cases, and we look more to Luxembourg, Ireland, and kind of other locations. On the taxation, well, just a few words on this connection. Of course, we start with investors. Important to be what kind of investor. We heard pension fund, for instance, or do we have a qualified private investor or whatever. So
in South Africa and further afield in Africa, we've also seen similar trends on some of the shadow banking or alternative funding mechanisms. The introduction of and codifying of REIT principles and on the stock exchange in South Africa has also crystallized that funding channel, if you want. It's been something that's been wanting for a long time. Private equity, there's been some clarity created in legislation which has also opened that up. So a number of those areas of financing have certainly emerged very strongly. I think just to kick off and as a general statement, looking from a developing or emerging economy, the sensitivity to highly geared transactions and excessive interest is substantial. I think firstly the commercial considerations, clearly debt funding into countries that are quite often perceived as economically or politically volatile. Country risk is a big issue. Weak and volatile currencies and strategies around that plays a big part in the funding.
So where does that leave us? As we've heard from our presenters today, I think there are a lot of opportunities here for those looking to raise finance within the alternative sector, and indeed for those looking for yield. Getting into the alternative sector is potentially interesting for them. But I think for those that are brave enough and prepared to put in that extra effort to look at this as a sector, I think there are real and tangible rewards.